Good afternoon and welcome to the Blue Line Metals Edge for Thursday, December 8th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. Don't need the headset. If you have any questions on futures option trading, be sure to reach out to us, give us a call, or go to our website here, bluelinefutures.com. Register for a free 2-week trial of our research. I think you'll enjoy it. Now, getting into what's going on here, there's a few things that we got to look out for over the next few days. All right. One is going to be, if you look tomorrow, you're going to have this PPI and you're going to have the core PPI, the month over month. If you get an uptick on this, you're probably going to see equity sell off again, metal sell off, dollar gets its rally, all the usual suspects on everything. It'll be another volatility driven event. So, it seems like it never fails. Now, one thing I could say is that these volatility driven events that have happened on Fridays, seems like they spike down, and then they rallied all the way back up. And it tends to go a lot farther each time, whether it's going to be on the upside or the downside. So if you're in the futures and it starts going against you, you might want to take them off. You don't want to have this thing rip, like if you're long equities on the S&P, have this thing sell off, like the S&P down 100 points on you, or the Dow down, 800 points. Or on the other side, if you're short and it rips higher back up to 4,100, that's where that 200-day moving average is on the S&P, and that's what a lot of these places like Morgan Stanley were all targeting. So, that's my risk management strategy on that. Might not even trade at all tomorrow. So if you go into next week, this is the another granddaddy number, this CPI month over month, year over year. And then the other one is you're going to have the FOMC, the statement, and the Fed funds rate and everything else. And they've got it right now at a 77% chance of a 50 basis point rate hike. So those are the things you got to keep an eye on. So I'm going to clean this up, kind of change things around as far as the current strategy. I might just put where the system entered in at. And where the stop losses are at up in this level. Or if I am doing something like I adjusted this, we bought some gold today, 1,800 on the micro, putting in another buy at 1,760. Maybe we get that on the volatility event. And then the stop loss is going to go at 1,700. So if you look at like gold, for instance, on this chart, you could see that if you buy 1,800, you buy that second one down at 1,760. It's going to be right in this range, and you put a 1,700 stop. Well, if it breaks all the way down to there, chances are we're going back down to these lows. So we're going to have a hard stop working on this one as well. We might overlay it with some put options additionally. So I'm going to clean this up a bit. And then I'm also going to move these ranges over onto the corresponding reports. So grains and softs are probably going to go on the breakfast report. These will probably go on the bond report. I'll keep natural gas on here as a lot of the people are trading it. But you can see that, a lot of this good open trade equity here, if you follow the system and you bought at 1730, you're going to want to either buy like a put option coming in this event. You don't necessarily want a stop loss that's very tight because you might get clipped out. Same thing on the silver. If you're long at 2090, that market's at 23.27 right now. You might want a cheap put again on January. I believe there's like 19 days left on them. Gold silver ratio continuing to break down, 77.38. That silver is really bucking the trend and really trying to keep its upward momentum. You got platinum trading at 10.15 right now. So this thing's up about $5,000 at the moment. Platinum's one you'd have to have a stop loss. There's not really liquid options there. Copper up at 388. The high was 391.25. I think that thing's gunning for $4. I really do. And then you look at WTI. Up $3 at one point today. There was some talk about some oil, some shutdown going on, and then as the day progressed, it really, it rolled over and died on us and went red. So nothing else really standing out here too much. That 2-year, 10-year yield minus 77.5 basis points. I read a report by Bank of America. They think the 2s versus 10 are going to flatten over the course of 2023. They're also looking at their outlook was we've got declining inflation, lower corporate profits, and periods of recessions in both the U.S. and Europe. And he said what could really break the equity market is if the dollar strengthens back up, China clamps down on its economy, which with them lifting the COVID restrictions, it looks like they're trying to get some growth going in their economy. The stronger dollar, the dollar's breaking down now. It's been holding below that 200-day. And then the recession here, if it deepens. So that's kind of your only wild card there. I believe we'll have a profit recession, but I don't think it's going to be quite as bad. And then the Fed will ultimately stop raising rates once the labor market starts to cripple as well. Another interesting tidbit was on the last rate hike, so expected in March, U.S. equities, the S&P 500 over the next 12 months has averaged a 14% return. So we'll want to keep an eye on that as well. Again, if you have any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.